All right, guys. Welcome to what's today? Let's see here. Today is 9/13/2025, and this is our mentorship webinar. Okay, so this is where we break down the week. We break down trades we took, why we took them. We break down current market conditions, which is very important, right? We got to understand what sort of market that we're in, and more importantly, discuss trades we took, why we took them, how the outcome of them, and it's all in all just a time for us to really figure out what's working well, what isn't, right, and to really be aware of our strengths and our weaknesses so that we can go into next week completely prepared. This week has been a challenging week, along with the week before it. In my opinion, the market has been really whipsaw, back forth, volatile. But the truth and the reality of the situation is this is the market, right? The market doesn't care about how we want it to work, or it doesn't basically determine its movement based off our expectation. And that's the most important thing that I took from this week, right? Regardless of all the, studies and data and everything that we collect, yes, it's super valuable, and it helps us build confidence. It helps us enter into positions, but at the same time, we are not traders. We manage money. Okay, I always say that. It's so true. The biggest takeaway is we don't trade. We manage capital. And the moment we stop managing our capital appropriately is when we start to lose. Okay, so those are some big takeaways from this week. So let's dive right into it. Monday morning. And I'm just gonna cook through here. Obviously, if anybody has any questions or wants to dive into any topics, feel free. The mic is yours. All I ask is that you hit mute until then. Okay. So let's break right into Monday. So Monday was right here, 9/8/2025. So once again, I approached the market the same way, the exact same day. Okay, this really simplifies the game for me. Now, what you're going to see here are some lines on a chart, right? These are some key levels. I'm just going to get rid of this guy, and I'll leave this guy, and I'm going to make a bull target as well. All right, so notice here, this is the price action that we're talking about. This is Monday, okay? So how I'm going to approach this is in a bullish and bearish scenario, all right? So this is what it looks like in pre-market. So the first thing I do is identify end of day, all right? So end of day is right here. That is the previous day close, all right? Then I'm going to identify previous day high. This is going to be our bull target, all right? I know that says bear, but that's our bullish scenario. If buyers take the open, I want to target this guy, all right? This 651, 652 level. Now, if sellers take end of day and they show strength here, I'm going to be looking for short plays targeting previous day low, all right? So this is our 50-50 perspective. This is what really helps me cancel out all the noise that doesn't actually serve me as a trader, okay? Like, we day trade, so we got to be very intentional on what we actually are watching, right? Like, not everything is going to help us. Yeah, it may be informational, it might have some sort of intrinsic value, but at the end of the day, I like to weed out the information that actually serves me and what doesn't. Okay, so every day I like to approach the market the same way. I'm looking to see who defends the open, and I'm going to trade with them. And then I'm looking to see who, I'm either going to the upside or I'm either going to the downside. All right, there's also another key level right here that I'm going to point out. And notice where I'm getting this, guys. All right, because charting is very important. This right here, this level, 649.08. This was what was this, Thursday? The previous Thursday's close. All right, so this is just another pit number from a previous day. It might not be the immediate pit number. This would be the immediate pit number. This would be the immediate pit number. And this right here would be the immediate, right? Previous day high, previous day low, end of day. Now, this is end of day from a previous day, but it still has a lot of significance. You can see here, buyers could not end up holding that level. All right. So what I'm going to do is I'm going to call this critical, right? Just to give it some significance, right? We don't need to go super crazy with it, but I like to make it yellow, call it critical, and now I want to see who could defend that. And then this is our bull target, bear target. Okay. So now price action opens up. And now I like to trade my strategy, okay? What I'm looking for here is our three-step approach, all right? I really liked where the 1 hour trend was on this day, right? It's close to price. This is going to be the 1 hour trend, this blue line, okay? This is the 1 hour 9. So how I'll do this is I'll actually pull up a 1 hour so you guys can see why it's important. Let me go here. Because all in all, when I'm getting ready to get into a position, hold on, this is 9, 8, okay, looks like this. So this right here is what it looks like on the 1 hour. So I'm noticing some things. I like the EMA cloud, all right, the EMA cloud's green on the 1 hour. I like that we're coming into this key level, all right. Now, all in all, this is a pretty bearish pattern. So it's a break. Now we're retesting, okay? So I want to see who could defend this level. The EMA cloud in the EMA, the 9D EMA there on the 1 hour, this looks pretty bullish, right? Like I like how buyers are approaching this level. If we can burst through this level, there's a very high chance that we're going to see up here, all right? So that's the way I was looking at this. So now I actually need a reason to get into the market. So now I'm going to focus more on the chart on the left. And I'm going to go, okay, I'm going to look for my criteria. And when I see it, I'm going to pull the trigger and get into the trade. Okay? So you see here, I ended up getting into the market at, what was it, like around 10:33. Now this is on the 5-minute time frame, okay? Notice there's no RBI or GBI. If I drop down to the 4-minute, which we've recently started doing a lot of studies on these, we ended up getting some really clean criteria right here. All right. So once again, we're playing this the exact same way. We got open print, which is right here at 64862. Look at it on the 4-minute. Okay. We get our open print identified. All right. Next. Now we're looking for the moving average cross. All right. So the EMA cloud has gone from red to green. All right. Once again, this is telling us that there's a shift in the conditions, and that shift may lead to a good opportunity. Okay. But we can't just get into the market. We can't just pull the trigger, right? Because we need to manage our capital. I don't care how low your win rate is. If you manage capital appropriately, you will still be profitable. Okay. To manage the capital appropriately, you need to actually have a you need a clear entry signal. And that's where we get our red bar right here. That was disrespected, all right? That's supposed to be an arrow. You'll see right here, this is where we entered into the market long, and our stop loss went right here, okay? So we're entering in at around 64922. And we have about a 40-cent risk here, 60 or 50-cent risk here to see if we could get that move all the way up to 65221 or whatever level that was in between that. Okay, and you can see here we got a pretty nice move, and we were able to lock in profits on the way. We got another red candle here that was disrespected and ignored. And guys, once again, the areas of value are if you guys take anything from this webinar, let it be how to trade the area of value. All right. So if anybody here didn't watch the mini course, areas of value are the zone around the RBI. Okay. So I teach this to everybody in the one-on-one mentorship because it is the most important part, in my opinion, to trading the market. All right. An area of value is literally you've seen or identified an RBI, so you draw a box around it. All right, so this be the RBI. This box, I'm gonna make it yellow, is the area of value. All right, this is the key level I'm looking to play retests off, okay? Or if I'm already in the position because we entered in long right here, this is our risk, okay? Our stop loss goes down here, and we wanna make sure buyers hold this zone, all right? Now, it's a great way for us to determine buyers still have the ball, all right? Because look, we get another red candle here. That's ignored, all right? We're already in the trade, but if I want to determine buyers still have the ball, I want to make sure they hold this RBI as well. And you can see they did, right? Like price came into this zone and continued to push up until it rejected and came back into the initial area of value right here. Look at this. Bam. Okay. So all in all, what I'm getting at is areas of value, our skill, our awareness to be able to spot these zones and trade off them serves us exceptionally, okay? Because it helps us understand. I took multiple trades this week off the areas of value. It's a very good tool, all right? It's very beneficial. You can see here, price ended up coming all the way back down. I ended up getting out of this trade all the way right here, okay? Guys, in these markets, don't make the mistake that I've made where I'm holding trades too long, all right? Like in these markets, I'm looking for a 1-to-1, meaning I'm risking around $200 a trade to make 250, 300, okay? Like 1, 2, 1, lock that in. This had a pretty healthy trend, so we were able to do pretty good on this trade. But once, all right, ready? This is key. Once, say you're holding this trade, all right? You're holding this trade. Notice how this red candle right here, this guy, broke this low. That was a clear, so I'm always bumping my stop below the previous candle. So if I'm in right here, my stop goes here. And then if I'm in right here, I bump it up here, okay? And I'm going to keep bumping my stop up on my runner, okay? We've already locked in profits to the low of every previous candle. Then there's that one right there. And then right here, sellers disrespected that low. It's the same concept that we use for the RBI and the GBI, okay? And then I'm out of the trade. So that was my first trade right there. Second trade was right here, okay? So I ended up, so check this out, okay? Same exact concept. We have the 5-minute time frame on the chart on the left, and we have the 4-minute on the chart on the right. So let's just run through this as like how I was thinking, so that you guys get a better idea of how I actually execute and why I execute. So think about it. We're in this trade here on the left, chart on the left, on the 5-minute. Let me pull up my little tool. Okay, so we just hopped in this trade, 4-minute RBI, and we got out. Cool. So we've just locked in some money. All right, now we have a happy sign. Okay, it's Monday, and we just made a couple dollars. We're having a good day. Now we got to ask ourselves, why did we make money? We made money because we followed our process. Okay, we traded with buyers because we got the moving average cross with the RBI. Okay, cool. So now continue to look at this chart and look at the opportunity we're getting here. All right, I'm going to zoom in a little bit. So once again, we have open print as follows, okay? That's that green box I just drew. Now we have a moving average cross, okay? And we've also fallen below this yellow line that we called critical, right? You guys remember in pre-market, this was a key level. Buyers just failed here, okay? They couldn't hold it. And we know this because we just got a moving average cross. Once again, the moving averages give you they give you information that's so important because they don't lie to you, okay? Yeah, sometimes there's not much follow through, but if moving averages are actually crossing, it's based on a statistical mathematical equation that the price has shifted so much that the 5 and the 20 EMA have actually just crossed each other, okay? This is one of the most important parts of trading, is distinguishing the truth from what you think is happening. All right, a lot of times our ego gets in there. We start guessing. We start doing, oh, well, what if this X, Y, Z? Next thing you know, we're making bad decisions, okay? We need to rely on the moving averages to go, all right, the cloud has gone from red to green. From now, it's from green to red. And we just fell below that key level that we were just talking about in pre-market, okay? So cool. Got our moving average cross. We're at open print, and we get right here a green bar that's ignored, okay? Now, Josh, this green bar didn't get ignored. Exactly. So there's no short play there. This bar did, but it's not below the level, and there wasn't a moving average cross yet. So this candle right here becomes our cream of the crop, okay? It's got disrespected. We enter into the market short. Our stop loss goes right here, and now we're targeting low of day, okay? This is picture perfect, blueprint. And we got that beautiful move down to exactly where we were targeting, okay? So once again, this isn't like how I want the market to work. This is how the market inherently works in healthy conditions, okay? That's very important. The market isn't always going to do this, okay? But when it's in good market conditions, this is what we can expect, all right? Moving average crosses with RBIs and GBIs playing from level to level, all right? So that was our second trade right here. able to lock that in. Very good setup. Oh, and once again, guys, I really want to point this out because how important it is. We get the green bar right here. That's ignored. So we draw the box around it, okay? This box is the area of value, all right? AOV. Why is this important? Because look what happens when price comes back into the box. Sellers, okay? Oh, let me extend the box. Look what happens. Sellers, okay? And it's lining here up with the 20 EMA. That was a beautiful short play right there off the 20, okay? So say you missed your entry, all right? Say this right here should have been your entry and you missed it, okay? You draw your box and you wait for a retest. You don't just enter in short right here. You'll end up getting stopped out on the pullback. Wait for the retest of the area of value, okay? I'm telling you, that right there has been a major game changer in my life. And just to clarify here, notice, guys, price could never get above that area of value for the rest of the day, okay? So, I mean, it's once again, this is just how the market operates. These are 4 retests of that area that sellers would not let go of once. All right, so really good day, really good trading. Tuesday, I didn't take any trades. I did not trade any of this. This was absolute garbage PA. Once again, like, that doesn't mean we weren't watching it. Okay, we were watching it. I gave up watching by 12 o'clock. If by 12 o'clock I'm not getting anything, I'm pretty much done. And I'm taking my ass to the gym and getting away from the computer. That's so important, guys. You have to understand. If the market is not providing clean RBIs, clean GBIs, okay, once again, I'm just pointing this out here. Look how big these candles are. Okay, they're huge. There's no clear moving average. Notice the cloud is red the whole morning, so there's no cross. When we get a cross, there's no follow through. Garbage. And don't dismiss these. Learn from these. Okay, I've blown and lost a lot of money trying to force garbage in these conditions. Okay, our edge actually did end up showing up here later in the day, but I just wasn't here to see it. We got a moving average cross right here. We got a red candle here that was disrespected, so that would have been all right long. We got a red candle right here. You guys see that one? I just butchered it. Okay, red candle here gets disrespected by the following candle. That would have been a good long play with your stop loss below that little zone, and the market would have rallied. But by then, I was already done. I was over the market, and on to the next. Okay, Wednesday. Wednesday, I took 2 trades, 1 loss, 1 win, and basically, I played a 4-minute RBI to the upside here, which ended up being a loss. Hold on, this is 9-10. And this is, there's a couple things I did wrong on this trade, in my opinion. But all in all, I stomped out exactly where I was supposed to. I didn't put myself in a vulnerable scenario, which basically means I didn't risk a lot of money. And I was trading for smaller size. But altogether, you'll notice here there was no moving average cross. Okay, now there was on the 4-minute time frame. Okay, got one right here. We got a red candle right here that was ignored, so I went long and I got stomped out right there, following candle. And there was a couple things here that I should have noticed. One is I was literally trading right into a resistance on pre-market, and all in all, the biggest takeaway here is look at where the 1-hour trend is. Okay, it's very far away. So when I'm entering into the market up here at 654.30 or wherever, the 1-hour 9 is more than about $1 away. Okay, if this is my entry here, we're about $1 away. That's what we call an extension, and we want to be careful anytime we're trading that far away from the 1-hour trend, because once again, the principle to moving averages is that anytime a moving average is extended, there's a very high chance that it's going to come back and fill that extension or gap. Okay, so once again, we got to be aware of things like that. before entering into a position. And it's going to happen. And when it does happen, just make sure your risk is in check. Okay. So I took that loss right there, and then I was like, all right, I want to stay more focused on the 5-minute time frame. Let's see if we can get some criteria. We did get a little GBI right here, but we were coming very close to our downside target. I forgot why I missed this trade. I did not take that short. Oh, yeah, that's why. It's because I was far away from the 1 hour 9. Okay, so what happened is I realized why this trade didn't continue, and it's because how far away we were from that 1 hour moving average. So I didn't necessarily want to make that mistake again. And you can notice here the 1 hour moving average is pretty flat. You got to be a little more aware of stuff like that. We did go short right here. All right, so we hopped in the market short right here. Once again, open print right here, moving average cross, green bar gets disrespected, so we hop in short, make it yellow so it stands out a little more right there. Oh, I'm butchering it. Okay, green bar ignored, in short, stop right here, targeting low of day. Okay, that's the trade. Caught a beautiful move to the downside. Came right into our target. Look at that. 652.17. All right. So at the end of the day, key takeaway is I didn't make money here because we got lucky or because of anything other than the fact that we were patient and we traded our strategy appropriately. All right. There's no special trade. All right. It's your criteria is either present or it isn't. And when it isn't present, just know you are gambling. All right. Guys, I'm not perfect. You guys, I take bad trades all the time. You guys see them. But the key thing is to understand why, it's to understand when my criteria is present, the conditions, the market is healthy, it's fruitful, it has opportunity is present when our criteria is here. All right, this being the criteria: open print, moving average cross. It's right here. Open print, moving average cross, and then this is the most important part, guys, the green bar that gets ignored, because this tells me exactly where to put my stop loss. All right, my stop loss goes right above the ignored candle or the present candle, okay, and we take the market down. All right, and now once again, guys, say you missed it. All right, you draw your box around it and you play the retest of the area of value. Okay, there's a lot going on here when you see a candle get ignored. Basically, a lot of buyers are trying to get into the market, and now they're getting stopped out of their position. So once price comes back up to their level, that's where they end up stopping out of their position. All right, that's the psychological aspect behind the RBI GBI. Okay, there's literally people losing money when you see it. And then I was done after that, but just a couple takeaways, right? Once again, here's another green bar that gets disrespected. So if you drew a box around it, it would look something like this. All right, and then you could always play the retest. All right. Oh, if I missed that one, here's another green bar that gets disrespected. Draw the box around it. Play the retest. Okay? So, guys, areas of value. All right? They are key. They're critical. And all they are, I know it sounds like, kind of complicated, but in reality, all they are is the zone around the RBI or the GBI. All right, the rectangle you draw around the RBI and GBI, that is the area of value. That is what's going to serve you to better understand what you're looking at when you view this crazy market. Okay, so that was actually a really good day right there. 2 trades, 1 loss, 1 win. But all in all, I was really proud of that. How it worked out. This day, Thursday, the massive rally. I took 1 trade this day. And that's not to say that there wasn't a lot of great opportunity. It's just all in all, the market was just getting away from me, and I wasn't able to put my finger on it as quickly as I wanted to. I kept missing opportunities. My daughter didn't go to school this day. I'm not blaming her. I know that's kind of low, but you get pulled from your computer. You don't see the entry. And then when you miss it, you don't want to chase, okay? So I kind of just want to show you guys, though, how I should have played it. And once again, red candle right here, ignored. Draw your box, okay? Red candle right here, ignored. Draw your box, okay? Look at that retest. I was going to take it, but it happened. It just, I couldn't. I was looking for a better entry because you don't want to just enter in once it retests the zone, all right? It's not that simple. But once again, fundamentally, it came back to this level multiple times and respected it, okay? So once again, this is the area of value. Price came into it here. I also like how it was bouncing off the 20 right here. Price came back in here, came back in here. I took the market long right here, okay? Now, sometimes weird things are going to happen like this in front of you. So I hop in the market long right here. What is this at? 657.40. Yeah, 657.40. I put my stop loss right around 657. All right. Now, Josh, you got in at an RBI. Why didn't you put it right below that candle? Well, because A, I could afford not to a little bit. All right. Because when you're getting in the market long right here, when you're playing this RBI, you can't forget about this RBI. Okay. The market doesn't necessarily care which RBI you're playing. You need to remain aware of all the surroundings, okay? So if I'm getting in long right here and I'm looking to play up into the highs, all right? So I'm getting in long right here and I'm looking to play up here. Here's the RBI, right? But notice, because when I'm watching this, right, because I want you guys to view it the way like this, okay? I'm watching price action, and I see this red candle get ignored, okay? So what do? I draw the box around it. That's an area of value. Price comes back into this zone, and I hop in long, okay? Because notice where the 1 hour trend is. We're on it, okay? And buyers are respecting the area of value. That's enough for me. Like when we have a healthy trend and buyers are respecting an area of value, I'm willing to put money that it's at least going to go to high of day. Okay? And it did. Notice here, price never broke this red candle. All right? So once again, if I draw my box here, it never broke it. And we did get a slight push up into the high. Okay? Now, where I went wrong is I didn't take my profits. All right? I was actually, believe it or not, I was up a pretty good amount on this trade. It just happened very quickly. I wasn't able to exit out of my position. And next thing you know, I'm holding the bag. All right? This happens. It's part of being a trader. You don't get out where you want to. It rips up into your target for a split second. And, up here, right here, I'm up like $640 on this trade. And then by this candle, I'm only up like $230, right? So it sucks, right? And I didn't necessarily take profits when I should have. And, I paid the price for that. Because I ended up stopping out right before it continued to rally. It was very frustrating. But at the end of the day, this was a still very good trade. I played into, I stomped out right here, and it was very frustrating, right there. But it doesn't matter. Market doesn't care if I'm frustrated. What can we take away from this? The area of value never was disrespected. Okay, buyers continue to hold it. Now, where it gets tricky is as an option trader, you can't always hold. You're going to get low. There's going to be a lot of time decay. There's theta. There's a lot of other variables that play into the game, okay? So that gets a little tricky. There's no perfect way to do it, all right? The market moves its own way, all right? This is how the market moves. It's up to us to spot opportunity in there and scrape some money out of it. You know what I'm saying? Like, we can't change the way the market. And look at this price action. This is absolute garbage. Look at this. Look at this. up, down, up, down, up, down. This thing was terrible. But even in bad market conditions, it still respected the area